Hello everyone, I'm Shivang Mehta. In this session, we are going to analyze NCD issued by Urbo Capital. It is one of the well-known finance company in our country, and they have come up with a NCD issue. So in this session, we are going to analyze this issue, and we will try to find out that is it suitable for a moderate risk appetite investor to invest in this NCD issue or not. Before we get started, please subscribe your shop channel for analysis of new bonds, NFO, NCD, IPO, ETF, and many more. Also visit yourshop.com and use coupon code YO100 for flat rupees 100 discount on all products and free 1 year GST and ITR e-filing services. Now let's go ahead and analyze this NCD issue by Urgo Capital. So basically, first we have to understand what is NCD. So non-convertible debentures are fixed income instruments, debt instruments, usually issued by high-rated companies in the form of public issue to accumulate long-term capital appreciation. They offer relatively higher interest rate when compared to convertible debentures or any other fixed income or debt securities such as FD, commercial papers, etc. And they are for medium to long-term investment. Coming to about the company, Urgo Capital, incorporated in Feb 10, 1993. Urgo Capital Limited is engaged in the lending business and focuses on MSME sector in India. So the company follows a data-centric technology-enabled approach for its business growth. The company has identified healthcare, education, chemicals, food processing, FMCG, hospitality, electrical equipment and components, auto components, and light engineering. Micro enterprises is the major sectors for the business. Company mixes the traditional branch-based lending approach with the modern fintech-based lending systems. Urgo has made significant investments in technology and has set up its lending business driven by analytics, which enables the delivery of customized offerings to the loan applicants. So as you can make out, this is the new age lending company, Urgo Capital NBFC. So it is raising the NCD, and it has diversified range of you know credit credit offerings. So let's go ahead and see what are the offerings. So NCD is opening on April 7 and closes on May 6. Security name is Urgo Capital Limited and security type is secured redeemable non-convertible debentures. Issue size is 50 crore and issue self is 50 crore. Issue price is 1000 per NCD. As you know, we have to subscribe 10 non-convertible debentures in a lot. So 10,000 will be the minimum NCD. Listing will be at BSE and NSE. Credit rating is acute A plus by acute rating and research limited. Tenure 18, 17, 36 months. Series three types of NCDs are available. Payment frequency will be monthly, quarterly, as per the convenience and selection of the investor. Basis of allotment will be first come first basis, and so allotment for different categories will be institutional 20%, non-institutional 20%, HNI 30%, retail 30%. So NCDs offered by category. So institutional 1 lakh, non-institutional 1 lakh, HNI 1.5 lakh, retail 1.5 lakh. So total 5 lakh NCDs are available. Coupon rate, as you can make out, there are three series available: 18 months, 27 months, 36 months, quarterly, monthly, and series one is secured. Coupon rate per annum will be 10%, and effective yield for NCD holder for category 1 to 3 will be 10.37%, and the interest will be paid to your account quarterly. Series 2 will be monthly for 27 months, and effective yield will be 10.62%. And third series is for 36 months, monthly interest deposit, and effective yield will be 10.9%. Company financials. So total asset of the company has doubled in last 3 years from 8,000 crore to 17,000 crore. Total revenue of the company is around 15, also tripled in last 3 years from 500 crore to 1,500 crore. So company is showing on a strong growth and is on the growth trajectory. Profit of the company has almost grown 7 times to from 40 crore in financial year 2019 to 280 crore in FY21. So this proves the strong financials and ample of you know ample of space, financial space for the company to raise capital and expand their business. So objective of the issue is for the purpose of onward lending, financing, repayment, and interest and principal of existing borrowings of the company. So as we know, this is a lending company, so they want money to further lend to MSMEs. So and other general corporate purposes is also the objective of the issue. Coming to the taxation and credit rating. So taxation on NCD is if they are sold within a year, then it is 10%, and if they are sold after a year, then 20% with indexation. The interest income from NCDs is taxed in a similar manner as fixed income securities under income from other sources. The NCD proposed to be issued under the issue has been rated acute A plus for an amount of rupees 20,000 lakhs by Acutite Ratings and Research Limited. Such ratings are considered to be a stable outlook for the future. So you can consider the safety of your funds with this company. Strength of the issue. Strength of the company. So better return secured NCDs provide a higher NCD interest rate to their investors. So good liquidity, as we have seen in the financial. So company has strong financial fundamentals and liquidity. Sell NCD investments on stock exchanges. You can also sell put or call options. No upfront taxation on NCDs. Diversification of portfolio. If you want to diversify in a new asset and reduce the risk of your portfolio, and inflation matching returns and real wealth creation take place. Coming to the risks, so credit rating of the issuer. So choose a company with AA rating or above. Credit rating calculates a firm's potential to raise cash from its internal and external operations and its sustainability. So they sometimes, credit rating can also be rigged. So you should consider the financial and fundamentals of the company, level of debt, capital adequacy ratio, interest coverage ratio, provisions for the non-performing assets. These are all the risks financial company has to face, and as an investor you should consider or compare with compare them with the industry standards to ensure that your capital invested is safe. So ratings, there are different types of ratings. So rating scales are all awarded based on the duration of the debt instrument. So there are ample of 7 types of rating, and best is AAA negative. So how does the credit rating help an investor? So credit rating provide an investor with critical information to enable him to take an informed investment decision. So coming to the suggestions, so NCD from one single sector NBFCs that focuses on personal loans are not safe. NCDs from secondary markets are always delivered higher returns in the past. Diversification, that is investing across various firms and periods, can reduce the risk considerably. So now one more suggestion is that this company invests its funds or lend to MSME, and considering the volatility of MSMEs due to health crisis in last couple of years, and risk of their sustainability has always been a question mark. So you should consider your risk appetite before buying the NCDs of Urgo. So now you should consider your long-term wealth creation and vision, and you know the ability to create fund over a long period of time and invest in this NCD. Thank you.